Okay, lesson 14.2 is about writing off and collecting uncollectible accounts receivable. So we have two objectives. You need to be able to write off an uncollectible account receivable, and you need to be able to account for the collection of an account receivable that was written off. So first they're going to explain what writing off an account is. That just means that we're going to cancel the balance of a customer account because the customer does not pay. So remember, we're going to assume that a certain amount of our account receivable are going to be uncollectible. And so when we decide that we're not going to get money from this customer, we are going to cancel the balance that's left that they owe us. And so that is where we are writing off an account. So here's our example. On January 25th, we wrote off Edmonds Hospital past due account as uncollectible, $639.88, memorandum number 58. So remember, we've been putting money aside in that allowance for uncollectibles because we are estimating that we weren't going to collect on all of our accounts receivables. So what we're going to do now is we're going to take that money out of our allowance for uncollectibles. So we're going to debit allowance for uncollectibles to decrease it. And then we're going to credit accounts receivable to decrease our accounts receivable. They don't owe us money anymore. We're writing off that account. We're canceling what they owed us. Okay. And so we also need to credit Edmonds Hospital for that same amount. Okay. We're writing off that account. So this is going to go into our general journal because we're not receiving cash. Remember, we're using our allowance to cover what they owed us. So in our general journal, we're going to put in our date. We're going to put in allowance for uncollectible accounts, memorandum 58. We're going to debit that account. And then we're going to credit accounts receivable, Edmonds Hospital. This is where we're going to have a slash in our post reference because we are going to be posting this credit once to accounts receivable, and then we're going to post that credit again to Edmonds Hospital. So this slash is telling us that we're going to have two post reference numbers in there. So now they're showing us how we're going to post. Now we should know how to post. So we're posting, we're going to go start with our date. The thing that's going to be different here is when we are posting to Edmonds Hospital in our accounts receivable ledger, we are going to write in our item column. Remember, we've never written off in our item column before. We've never put anything in there. So this time we're going to put written off. The reason that we're doing that is if we did not have this in there, if this was blank, it would look like Edmonds Hospital actually paid us $639.88. But we know that that's not what's happening here. We are writing off their account, hence written off. We're canceling that balance. We used our own allowance to be able to write off that account. So that's why we're putting written off in there. G16, remember, stands for General Journal, page 16. We have our credit and our debit. So up here, we have a credit to accounts receivable. Here we have a debit to allowance. And then here we have our credit to Edmonds Hospital. And then in each one, we found our new balance. Remember, for a zero balance, we don't just write zero, we put a line through it, okay, showing that there's a zero balance. And then our last step would be to bring our account numbers to our post-reference column. So here we see for this line, we have our accounts receivable account number, and then we have our Edmonds Hospital customer number in that post reference because we posted that credit twice. Okay, so now we have to reopen an account that was previously written off. So what's happening here is that we canceled Edmonds Hospital account. We used our allowance to cover what they owed us, but now they're coming back and they're actually paying us. So we see right now Edmonds Hospital as having a zero balance, that we wrote it off. They don't owe us anything. So before we can even really collect or record that money that we collected, we have to reopen that account. Okay, so there's going to be two parts to this transaction. That's why there are two account numbers. So it says on March 9th, we received cash in full payment of Edmonds Hospital account previously written off as uncollectible. So they do tell us, okay, we wrote this off. That's telling us we need to reopen it. So first thing that we're going to do is we're going to do the exact opposite of what we just did, okay, to reopen. So we need to debit accounts receivable to show that they owe something, and we're going to put that money back into our allowance for uncollectible. So we're going to credit allowance for uncollectible. Now, we're also going to have to debit that Edmonds Hospital, okay, to get that balance back in there. So here's the first part of the transaction. This will go into our general journal. We're going to start with our date. This, like I said, this is just an exact reverse of what we just got done doing. So we're debiting accounts receivable Edmonds Hospital. Our memorandum is in there. That post reference, we're going to put that slash in there to show that we're going to be posting that number 2 times. Okay. Then we have our debit. And then we're going to credit allowance for uncollectible accounts. Okay, so now the second part of our transaction is this part here, actually receiving that cash. First, we have to reopen the account. Now we have to receive that cash. So they're just showing us that same transaction again. This we should know how to do. We receive cash, so we're going to debit cash, and we're going to credit accounts receivable, Edmonds Hospital. So since we're receiving cash for this one, we're going to go to our cash receipts journal. Our date, we're receiving that cash from Edmonds Hospital, so that customer name is going to go here. Our receipt number here. We're going to credit accounts receivable for the amount that they paid us, and then we're going to debit cash. Okay, now again, they're showing us our posting. And so first we're looking at our posting from our general journal, so that's kind of small up here. But it's just posting the exact opposite of what we had done before. Big difference now here, if they show, yep. So what we're doing here is, remember we had written off before, okay, saying that we had canceled that balance. Now, when we reopen that account, we do have to make note of that in the item column. Again, the same reason that we did it for written off. If we would not write reopen account here, it would look like they are charging $639.88 on their account again. They aren't charging a new balance. This was the original balance that we closed before. And so now we're reopening their account. So it's really important that you put those descriptions in that item column. Okay. So once we're done posting from our general journal, we're going to put those account numbers up here. And then they're also showing us our posting from our cash receipts. So here for this one, we're only posting to Edmonds Hospital. And so that goes with the accounts receivable. Remember, Edmonds Hospital, we're going to look at the accounts receivable column. That's a credit. That becomes a zero balance, so we draw that line through it, and the account number 120 will go to our post reference column. We do not post the accounts receivable or the cash debit at this time. Remember, in our cash receipts journal, we don't post those numbers until we get to the end of the month or the end of the journal, and that's when we post the totals from those journals. All right. So just like we did in 14.1, I do want you to kind of try to answer these questions on your own. Don't just let me answer it for you. So if you want to pause and try to find the answer on your own, or just take a second to think about that, that would be great. Okay, number 1, why is allowance for uncollectible accounts debited when a customer account is written off? The balance of the customer account is an actual uncollectible amount and no longer an estimate of an uncollectible. The way that I think of it is that we're taking money out of our allowance fund and we're using it to cover our customer, what they owed us. Okay, so it's no longer just that estimate. It's now we are actually saying this is uncollectible. So we're using that money in our allowance account. Number 2, does the book value of accounts receivable differ before and after writing off an account? Explain. Now, just a reminder, when we talk about book value, if you remember from 14.1, book value would be the difference between our accounts receivable and the contra account. So hopefully you remember The contra account is allowance for uncollectibles. So the book value is going to be the same because the same amount is going to be deducted from the accounts receivable and the allowance accounts. Okay, so the book value will not change. Number 3, why is a customer account reopened when the account is paid after being previously written off? So why do we have to reopen that account if we wrote off an account? Why do we have to reopen it when we get money? So this is just, if we don't reopen that account, it looks like that customer owes us nothing. So we have to reopen it to show what their balance is before we can actually record the cash that we received from them. Okay, that's the end of 14.2. You can now go to the 14.2 work together video and complete the work together while you're watching the video.